Hey guys, it is Lynx Savage here. It's a gorgeous rainy day here in Boston. At least it's not fucking sweltering. I mean, that heat was... But I'm not going to complain about it because last winter was a bitch and we're not looking forward to it this year. So anyhow, here we are. We're back with part 3. Yeah, you gotta love my t-shirt. Well, you can't really see it. Oh well, whatever. Part 3. Hopefully you can hear me over the rain. I'll try to talk as loud as possible. Part 3 is all about, it was just going to be about, finding a place to live and everything else, but I figured I would combine the two into one, getting a mortgage and finding the place, and what to look for. So, the goal here is not about having that white picket fence house. The goal here is to essentially be paid to live where you live. Alright? If you do this properly, you don't have to work. So what you want to first do is hop on the internet, look up places, look up websites like Zillow.com. They're not paying me, but it's Zillow.com, Zillow.com. And look for areas that you want to live in first. Like, those towns you've heard about or whatever. Look those up. They'll give you all kinds of stats on the place. You'll find out the crime rate. You'll find out what schools are nearby. You'll find out the overall feeling of those schools nearby. They even have something called a walkability score, which is how many of your daily errands can you get done in town walking. They'll give you what things are currently selling for around there. They'll give you the median as well as the low end and the high end. They'll also tell you how things are renting. That is important. You want to see how much things are renting for. The price of that house that we're getting ready to talk about might be really high and you're like, shit, I can't afford that every month. You won't be affording it every month. What do I mean by that? Multi-family homes, all right? Now remember, we were talking about building wealth here. We're talking about building tangible wealth. And land is a tangible wealth. And land that pays you is even better. So what you're going to do is you're going to look for a 2-family home. Not a 3-family, not an apartment building, a 2-family home. Most 2-family homes have an owner's unit, which is usually the bigger apartment. And then they have the renter's unit, which is what you would rent out to somebody. Now, take for instance, the town we're leaving is Chelsea, Massachusetts. And a lot of people have a bad taste in their mouth about Chelsea and crime and everything else. But the reality is that Chelsea is up and coming. And that's what you want to look for, up and coming. You want to be able to buy your house cheap and in several years be able to either refinance against that house because you've gotten so much equity because the property value has gone up, or to be able to pull out a loan against that house or sell the house. But we're going to be looking at keeping the house. There's a plan here. Keeping the house. So you look for an area that is up and coming. People tend to generally be scared of it, but if you go to Zillow.com, you'll see a market trend. And on that market trend, you'll see the rents, you'll see what things are being sold for. What you want to do is buy and rent somewhere close to the high amount. Not the exact high amount, but somewhere close. You're going to have to put in a little sweat equity on the apartment you're trying to rent out. But if you look around and you see, okay, 1-bedroom apartments are renting for $17 and you bought your house for $2, well, you really only carry a mortgage of roughly, I don't know, if you can get a mortgage that is 17. If you get a mortgage that is maybe $1,900 a month and you're renting out that bottom apartment for $17 a month, what are you paying? You're paying $200 in mortgage. That house is paying you to live there. Imagine if your rent was only $200. How much money would you really save? Because understand, you're not paying the mortgage by yourself. You're renting out that apartment to someone else, and they are helping you pay that mortgage. It's important to do everything you can to screen who you rent to. Now, a lot of different states have a lot of different laws regarding housing. currently what we are doing, we have one 2-family house that we're dealing with right now. And we are in the middle of purchasing our second 2-family home. So here's how it works. Once we move out of this apartment that we're in now, mind you, we're in the big apartment, the one with, the owner's unit, and we're already renting out the bottom for about $980. Now, that's what we're renting out the bottom for. It leaves us with a mortgage of $500. If we look at the actual trend on Zillow, in our area of Chelsea, rents have, boom, they've skyrocketed. That 1-bedroom apartment that we're renting out now for $980 goes for $12. When you look at other apartments, they're like 3-bedroom apartments, those are going for $17, $18, $21. Well, just by renting out our apartment, not only is the house completely paid for every month, but we make a profit just on that one apartment. Then you come in and you count the rental unit that we were first renting out. That's all profit. Now we have all this extra money because we're going to be renting out both apartments. Why? Because we're buying a second 2-family home. The second 2-family home, when you're doing this with FHA, you have to make sure that you are doing things like, and we'll go over FHA, you want to make sure that you are doing things like renting at market value, and that what you're buying is a step up in neighborhood, step up in size. And that's what we're doing now. We're buying our second 2-family home where we're going to live in the owner's unit, and we're renting out the bottom. And when you look at the rents for what we could get for the bottom, it's $17. So we're going to rent out for about $16, $15 maybe. And our overall mortgage is $21. Well, if the overall mortgage is $21, well, I think it's $25. The overall mortgage is $25. We're renting out the bottom for $16. Don't forget, we're making a profit on the other house. And we add that on top of this. These 2 houses pay for themselves. We have no mortgage to pay. And you're essentially just paying your regular bills. How much money can you save? Right? I know. It gets better. The plan ends with house number 3, okay? House number 3 is going to be a fluff house. It's a house that you're not going to live in. It's a house that you're going to have to save a couple of years for and pull out equity, because you are going to have to put down 20%. And that house is going to do nothing but make extra money. Because if you buy a 3-family house, anywhere within some of these up-and-coming neighborhoods, even some of the neighborhoods that seem kind of good, like Everett, Malden, you're going to spend about $500,000 on it, maybe $6. What you're going to get, and you're probably going to end up with a mortgage payment of around $253. Okay, if you have a mortgage payment of $3,000 and you're in an up-and-coming neighborhood, now remember that 1-bedroom apartment downstairs in a shithole like Chelsea can rent for $1,200, right? And that's in a shithole. Now imagine you have a 3-family house. These are usually large apartments, multiple bedrooms. You can rent out each one of those apartments for $18, $19. If they're 3 bedrooms, $2,100 a month. That's most of your mortgage on one apartment. Now you get all 3 rented out. The house is paid for by itself. You have more than a couple grand extra every month. You no longer have to go to work. Now, being a landlord sucks in some ways, and in some ways it's great. If you get a good tenant, it's going to be great. They don't complain, they don't break shit, and they pay their rent. If you get a bad one, yeah, you're going to have to deal with some shit. Understand that these are houses and that you own them. No one else is maintaining them but you. So, you're going to have to get to know a contractor, get to know a plumber, get to know an electrician to be able to fix those things. But guess what? You have the money because the houses are paying you for owning them. See what I mean? You're building wealth. Now, it's going to take a couple of years. I mean, it took 7 years for the first house to gain enough equity for us to go in and then buy the second house through me. Now, let's talk about mortgages, because even after the second house, it's going to be at least another 4 years before we buy our third house. But this is all about building wealth, building a foundation, building something that can keep you safe when economic hardships hit for other folks, okay? So let's talk about mortgages a little bit. There are a couple of different mortgages, but the two that you need to concern yourself with are standard mortgages and FHA loans. Now, there's a common misconception that FHA loans are for first-time home buyers, and they are not. They're not. Anyone can go through and get an FHA loan, but understand that the FHA loan process is painful. It is painful. And if you are not prepared, God help you, because you're just going to be so pissed on a daily basis. And then there's a standard loan. Now, the standard loan requires 20% of a down payment. It is a much easier loan to get, but it does require 20%. Okay? On the house that we just bought, that would have been $80,000. Hell no, we ain't got no damn $80,000. So we went with the FHA loan. Now, we were under the impression that you can only do it once. Well, my husband got the loan the first time, and it was all under his name, and we weren't married yet. So now this time we're going through me. I'm applying for the FHA loan. Little did we know we didn't have to go through that. But anyhow, we went through it. And for an FHA loan, depending on the price of the house, because they're going to determine from your income, your debt to income ratio, if you have any current like car payments or rent that you're paying or anything else, they're going to count all of that and see how much they can pre-approve you for. Now, both will do this. Both the standard and they'll pre-approve you first to see how much they're willing to at least try to give you. For an FHA loan, for what we spent, it was only 3.5% down. 3.5%. That's it. So we put down, I think it was $14,000 and change for this. I mean, we originally gave them a check for 19 because we were going to put down 5%. But then once we found out that the house we were buying is actually lower than what we were pre-approved for, we were able to put down a lower percentage because, you know, we make money. So that's just what it is. So you go through all that process. They tell you how much they can give you. You get how much, you know, whatever your down payment is. The FHA is 3.5%. That is the way to go. You can also do this as a no closing cost loan, where what they do is all the closing costs, they roll it into the loan, so that way you don't have to bring cash to closing. But you have to be prepared. Remember last time when we were talking about your credit report and going over everything in it? For an FHA loan, because of all of these, you know, Homeland Security laws and everything else, they have to verify every single penny that you get to make sure that you are not funding or being funded by a terrorist organization. I shit you not. Thank you, Homeland Security. Bullshit. But everything on that credit report, if you had 3 hits on the credit report, like people checking your credit, those hard hits, you need to write a letter for each one of those hits. I guarantee you they will ask you for it. And when they ask you for it later, you're going to be pissed that they didn't ask you for it in the beginning. So you're going to write, it's called a letter of explanation. And you're going to explain what each of those credit hits were. This credit hit was for, you know, I went to buy a car and they checked my credit through 3 different credit people. So you got 3 hits. Boom, done. Letter of explanation. For your bank accounts, any weird or large withdrawals or large deposits that are not paychecks, you need to explain. You're going to write a letter, put down the check number, put down the transaction number, put down the amount. This was from, you know, mom and dad. And they're going to want a letter from mom and dad saying, yes, we gave him this. I shit you not. That's what they're going to want to do. You need to be able to print out or scan your bank statement last 2 months or the most recent 2 months. If you do electronic banking, you can download the PDF. It's great. You're going to need your last 2 months or your most recent 2-month pay stubs. They are going to want all of your employment information because they will verify it. If you have student loans, you have to know what kind of student loan, what your payment schedule is, and you need to write all of these things down into separate letters. Yes, signed, dated, scanned into a PDF. If you don't have a scanner, you better go get one. You're gonna need it. What else did I have to do to be prepared? It was really just the writing of all these letters and combing through your bank statements and everything else. If you overdrew at any point in time, that's going to be a problem. If you owe someone money, if you have tax liens, Write a letter as to what that is all about. Explain it. They're going to want to know where you got your down payment. If it was just a big lump sum, like let's say you financed or you were able to get a gift or whatever, they're going to want to know. Any checks you write, they're going to want copies. And this is within the last 2 months, so it's not too crazy to worry about. If you already own a property like us, they're going to want a copy of the deed. They're going to want a copy of the homeowner's insurance. They're going to want a copy of your taxes. Yes, 2 years of taxes. If you don't, and don't miss anything. And when they say every page, even the blank pages, okay? On your checking account, pay stub, whatever, even the blank pages, okay? You're going to include all of it. And if you are prepared and you have all of those letters, you have, any PDFs that you might need, such as your bank statements, your payroll statements, W-2s, tax returns, I would say if you were currently renting, your rental agreement, they're going to want to see it all. Remember to write letters of explanation for everything that looks a little strange. Any hits on your credit report for people checking your credit, any derogatory remarks. If you closed an account, it is remarked on your credit report, and it is a derogatory remark. This is why I told you not to close those cards. It's a derogatory remark at that. You're gonna have to explain, this was a high interest credit card. I closed the account after I paid it off. That's it. Be on time and be in constant communication with your mortgage broker. Shop around, but 9 times out of 10, your real estate agent, and usually your real estate agent, don't go to like a Remax or something. Talk to people, okay? Talk to people and get their recommendations. That's what you're going to do. Get the recommendations and talk to those realtors. Choose the one that best fits your personality and understands you. A good realtor will usually have a mortgage lender in his pocket. So you're going to talk to him about that and deal with that mortgage lender. That way, you're more likely to get the mortgage because they know the broker and there's a little buddy there. But they're also willing to hold your hand a little more and be a little more in communication. If they say they need something from you, get it to them immediately. Immediately. Not tomorrow, not next week, immediately. The faster you get it to them, the faster they can process this. Once this goes into underwriting, they just might ask you for other shit. If you're married, they're going to want your spouse's W-2s. They're going to want your spouse's bank accounts if they have a separate account. If they transfer money into your account, they're going to want that too. Just be prepared and understand that they're going to ask you questions. They're going to ask you for stuff. It's going to feel invasive. Deal with it. Just deal with it. Do what they ask you, and you will be done. All right? That's about it. You have to write a letter of intent as well. And to me, this is just them trying to keep people who cannot read or write well from owning property. The letter of intent is basically a love letter saying why you want to buy this particular property. It's bigger for my family. It has parking. It has a bigger yard. It has a bigger interior space. It can net more income. You want to be able to write and tell them why you're looking to buy this new house. Yes, they are requiring stuff like this these days. If your English skills aren't up, I suggest you take a Learning Annex course and get on the fucking ball, because you have to be able to write. These letters of explanation, they can't have broken English. They can't have misspellings. They can't have poor grammar. They can't have any of that. They need to be impeccable. Your English teacher needs to give you an A. And that's the deal with these. That's the mortgages. When you go through a standard mortgage, you don't have to jump through all those hoops because you're giving them 20%. They're confident. They're fine. So don't worry about the standard mortgage. It's the FHA loan that you want to go for. It's the FHA loan that you're going to be able to get. It's the FHA loan that's going to give you the most headache. So to recap, look for the areas you want to live. If you're priced out of them, start looking for up-and-coming areas. Up-and-coming areas, you can actually look up up-and-coming areas in blah, blah, blah state in Google, and it will return the up-and-coming areas. Look for multifamily homes. You're not going to be living in a picket fence. After you buy the third home and you rent out your owner's unit in the second home, then you could probably afford it. then you can probably afford that white picket fence single family home that all the other houses are paying for. But you're still going to probably have to work in order to pay your bills. But anyway, multifamily homes, all right, you're going to get 3. You're going to start with 2 2-families and 1 3-family. Mortgages, you're going to go for an FHA loan. It's only 3.5%. Be prepared, okay? If you give your mortgage, your loan officer, now if you have a good loan officer, he holds on to that and only gives the underwriter what the underwriter asks for. Because you give too much information, the underwriter has a right to dig further into there, and you don't want that. So you want a good loan officer. And the loan officer will hold on to all this information that you give him, and he will disperse it as underwriting asks for it. So that way you're not being bothered. You're just sitting there and waiting, okay? They will make you pay for a appraisal. The appraisal guy will also find out anything that needs to be repaired. Make sure any house you purchase, you go and have an inspector do it. It's for your own edification, but it'll tell you everything that's wrong with the house and what you should fix. And that'll let you know if this is a good house for you to buy or not. You can back out. Oh, and one thing that I did leave out, there comes a point in time where it is 100% out of your hands. You've done everything you can do. And that's when this goes to underwriting. You've got your credit right. You have a good credit history. You have no negative remarks. You've got all of your letters. You have everything possible. It can still go south. And that's out of your control. That's out of your control. If it goes south, you go to another mortgage lender. 9 times out of 10, you'll get the loan. But just know that it can go south no matter how prepared you are, no matter how much money you've got. It can go south. And they can say, no, we're not going to give you the loan. Right now, we're in underwriting, so I'm a little crazy waiting for the news as to whether or not we got the loan or not. And I'll update you guys on that. But yeah, until next time, I hope this was useful information. If you take this information and run with it, you don't have to work. You're no longer a slave. No longer a slave. Okay? So that's all I got. This is Brutal Lynx. Lynx Savage with Brutal Lynx. Don't forget to like, share, subscribe. Don't forget to check me out on Facebook at Brutal Lynx. You can also follow me on Twitter at Lynx Savage, and don't forget to follow the Big Boy Project as well. They're on YouTube. You can find them as the Big Boy Project, and you can follow them on Twitter at the Big Boy Project as well. I hope this has been helpful information for you guys. Again, any questions you have, just ask them, and I'll answer them, because I can't give you guys all of the information in a 20-minute video. It just doesn't work that way. So yeah, that's it. I gotta get into work because I'm running late giving you bitches all this information. I will talk to you guys later.